My name is Conrad Levesque. I'm a lead wealth and tax advisor here with Alison Wealth Management. I'm also a certified financial planner as well as CPA. And I'm here to talk about a proposed tax law that really could impact a lot of you in filing your 2023 tax return, as well as moving forward, at least into 2024 and 2025. And so we want to unpack as much as we can, but we're not going to go over every bit of the proposed law. Again, it is proposed, it is making its way through Congress, and it has not been signed into law, so pay attention to that. That bill is called the Tax Relief for American Families and Workers Act of 2024. And there are a number of provisions in here that we want to talk about today. The first is really the child tax credit provision. And what we have today is a total refundable base of the child tax credit. This proposal would actually change and modify that rule to a per child basis, meaning you could have a refundable portion of the tax credit per child, not just in total. There's also a change in the refundable limit on that child tax credit. Currently, that number is $1,600 for 2023. That number would move to $1,800 for 2023, $1,900 in 2024, and $2,000 in 2025. A big additional part of this is an adjustment to that child tax credit for inflation. Moving forward into 2024 and 2025, that number would actually increase based on inflation itself. And last but not least, there's a change to the determination of earned income that could qualify for the credit. Parents can elect to use prior year taxable income versus current year for at least the tax year 2024 and 2025 if the prior year income yields a better result. In addition to some of the individual changes, we're seeing a big change to, and potentially big change to what are known as the innovation and growth credits or deductions. And the big one being Section 174 research and development expenses. Prior to really last year, the R&D credit was available for companies to expenses or costs related to Section 174 expenditures. That credit actually expired as of December 31st, 2021, leaving all of those expenses still subject to amortization over a 15-year period. And so what we're seeing is this proposal is that Congress is trying to correct that and retroactively enact this legislation for periods beginning after December 31st, 2021. So if you have Section 174 expenses and you had to amortize those for 2022, this bill would actually allow you to go back and amend your 2022 return and expense those. That's big. So pay attention to that if you've been subject to the Section 174 rule in recent years. In addition to that, it appears that there's going to be an extension of the allowance for depreciation, amortization, or depletion in determining the limitation on business interest. I'm not going to go into the moving parts there. Just know that there is a rule that allows you to apply the limitation on business interest before depreciation and amortization. So pay attention to that to make sure you don't get caught not being able to expense interest. On top of that, we're seeing an extension of 100% bonus depreciation. The actual 100% bonus depreciation rule, it didn't expire, but it does phase down starting in 2023. 2023 assets that are purchased subject to bonus depreciation are only 80% deductible and will continue dropping by 20 percentage points until we get to normal depreciation. This would actually extend the 100% bonus depreciation through a period of 2025, but it would expire after that. On top of that, we see an increase in the limitations on expensing of depreciable business assets. This is better known as the Section 179 deduction. It goes from $1 million of expense with amounts being limited over $2.5 million of total to now 1.16 of expensing and a $2.89 million threshold that has to be crossed. And then ultimately adjusting for inflation moving forward. So look for those numbers. Additionally, and not to belittle some of this, there are big changes to, or at least extensions to the rules for certain disaster-related personal casualty losses. Again, I'm not going to go into the moving parts today. Just know that this bill will actually extend some of those that have really technically expired. There's an exclusion from gross income for compensation for losses or damages resulting from certain wildfires. So clients in California, any kind of compensation that you might relieve, this could now, what was going to be potentially taxable, this would change that to now non-taxable. And then ultimately, there's additional relief or additional mention of relief payments specifically related to the East Palestine train derailment. Those would be qualified under disaster relief payments and then therefore not be subject to tax. There's some additional affordable housing credit changes that are coming, as well as some bond financing. Again, we're not going to go into that, but if you are subject to that or you're interested, certainly reach out. We'd love to talk through. And then lastly, there's some tax administration and fraud elimination provisions. The big one here from an administrative perspective, for all my small business clients or business owners, the Form 1099 NEC or 1099 miscellaneous threshold, which has traditionally been $600. So any payments that are $600 or more in aggregate for a year require the filing of a 1099 NEC or 1099 miscellaneous. That number will actually now go to $1,000 and will adjust for inflation for any payments made in 2024 and beyond. And then the last part of this is really funding the credits and funding all of these tax breaks. What we're going to see is the accelerated closing down of the COVID-related employee retention tax credit. There's been a number of fraud cases related to this credit. And so what we're seeing is Congress saying, let's accelerate this. Let's go ahead and close this down. There's some other penalties that are now being proposed because there's some what we call credit mills that are being egregious. So there's a lot more information related to that than we can go under today. However, I do want to point out, if you have a valid claim, those claims will be valid as long as they're submitted and substantiated by January 31st of 2024. So you have a short window if you actually have a valid claim. You just need to go ahead and get that in and make sure you take care of that. So as you're reading through, as you see information, again, remember this bill is only proposed. This is not enacted just yet. It will affect the current filing year. So pay attention to what's happening with your tax return if some of these things do apply to you. If you have any questions, if anything comes up that you feel like you need our help with, certainly reach out. You can reach us at AlisonWealth.com and schedule a call with myself or Dave Alison. David Roth is another great tax resource here internally. Would be glad to help you out in any way we can.